All right, guys, welcome to this episode on how whales manipulate the market. I would like to break down for you the many different ways that the market is manipulated so you can make a better investment choice. If I show you, for example, a $100 bill, and I say to you, can you tell me if that is real money or is that a fake dollar bill or $100 bill? How would you know if it's fake or real? The only way to really know is to really know what the real money looks like. Once you understand what the real $100 bill looks like, everything that's in it, the paper, the coloring, the numbers, every little detail of it. Once a fake gets put in front of you, you'll see it and you'll know that it's not real. That is exactly how the market works. Once you understand how the market functions, when you start getting hit with crap, you will see it right away. And hopefully this video will help you guys understand what is real and get really good at it. So when the lies come around, or the hype, or the pump and dumps, or the market makers and the algorithms and all that crap that they throw at you, try to make you buy something that is not real, it's not good for you, you will see it and you'll stay away from it. All right, so let's dive in. We're going to start with using Bitcoin since we have a longer history to work with and it's easier to see it because now we have kind of like a future projection of what happened. And if you look at any market, doesn't matter what it is, even though the price goes up, it's not without is going back down. It happens. The market goes up, the market goes down, the market goes up, the market goes down. This is a natural, healthy thing that the market does. So even though you get these big dives down, the market will still continue to go up if the project is healthy. Whatever you're investing in, if it's good, you are going to get these pullbacks. It's a normal, healthy market the way it works, okay? So we're going to get into why, for example, we're going to look into back in October of 2020. 10 reasons why Bitcoin is a terrible investment. Back in 2020, the price was sitting around about $11,000, $12,000 back in the day. Okay, now this article was written. Doesn't really matter who wrote it. I just grabbed something random. There's a bunch of them out there back in the day, and even nowadays. But it doesn't make them bad. It just you have to figure out, look at the project more than listening to whatever someone else is saying. So here they're giving you 10 reasons of why Bitcoin is a terrible investment back in October 17. All right, so we'll go back in October 17, which is right over here. If you look at the bottom of the screen, it says October 18, October 17, 2020. If you would have listened to that article and many other articles letting you know that, hey, this is a bad investment, you would have not purchased in. And guess what would have happened? The market would have left without you. And it kept running, and it kept running, and it kept running. So it went from $8,000 to $64,000 without you because someone told you this is a bad investment. Do you see where you got to be careful on where the sources are coming from? Doesn't mean that the source is bad. I'm sure they have a lot of good information, but you have to understand yourself, not listen to somebody else what they're saying. Okay, here's another one. 13 reasons people think crypto investing is a bad idea. Now this is back in July 25th of 2021. All right, so July 25th puts us about right over here, and this is when the big dump came in. So you would have missed the boat if you would have stayed out of that one because there's 13 reasons of why you should not buy this. So you would have been around 34,000 around there, and it ran away up to 69,000. Yeah, that's a terrible investment if you ask me. All right. So again, just because somebody says something, it doesn't make it true. Okay. All right. So we did two bad ones. Now let's do a good one. Here's 7 of the best cryptocurrencies to invest in. Now this is in November of this year, November 3rd. So we got 7 best cryptos. Get in there right now. All right, so this came out November 3rd. November 3rd is up here. So you get into it November 3rd, and you get in around 60,000, goes up to 69,000, everything's looking good, and it comes down, and now we're dropping down to 54,000. So now it's the opposite. So what's going on? Why isn't it working? Why is it every time I jump in, it always goes against you? Well, this is where you need to break it down and start to understand what you're jumping in. So if you pull back, you will see that this coin did go up, tried to break the 63,000, 64,000, and it didn't do it. So he came back down, tried again, tried to get in, did not work, came back down. So it fell twice. The media's letting you know, hey, look, this is really good, get in now. But you never buy so close to the support. You buy down here. See where the yellow lines are? This is where people get in. This is where the deep pockets get in. This is where the investment in is down here. Down here. They don't buy way up there. They're making you buy way up here. It goes up, it fails, there's not enough momentum, and down it goes right down here where they are going to be buying again. So it's knowing when to buy by understanding how to read the charts, not following what they say. I will link on top here how to know when the buyers and sellers are in control of the market, so that way you can watch that video. That will help you a lot more. That way we don't spend too much time now understanding when is a good time to get in and get out. All right, so moving on to the pump and dump. Okay, so everything I'm about to show you, the pump and dumps, the market makers, the algorithms, everything that is being used, it is illegal in the circularity laws, but they still do it. These companies get fined for doing what they're doing, but to them it's no big deal because they make billions off of people, and then their fines are a couple $1 million, and they pay the fine, and they still continue doing what they're doing. So the pump and dump, how does that start? Well, for example, you get stuff like this, Shiba Inu. Okay, out of many stocks, out of many coins, I'm just going to use this one for example. You know, it's up by 100% in the last 7 days. Here's what to know before investing. This is on October 27. All right, so people hear this. October 27 is right over here. They're telling you that, you know, that the coin is really good. You need to get into it. The thing is, before this takes off, before they start pushing it, and it's hitting all the Twitters, and they're hitting all the Facebooks, and they're hitting all the whatever any way you can talk to, they already bought way back here. They got into it. They bought a lot back here, right? And it pushed the market up. And now it's holding. Now they're doing is they're dumping some more money. It's starting to run up. They're getting people in. They're trying to get for this to work. It is like they really need everybody to get into it, because this is the most common in trading. They go after people to buy low cap coins. They find a cheap coin to get everyone to come in all at once, promote get rich quick with this investment, and when it starts to pump way up here, they start dumping it. The people that bought down here, they get their money out slowly, and then it starts to fall back down. And sometimes it will stay for a while, but the people that already bought up here, they're hoping that, oh, just wait for the next pump, wait for the next move, wait for the next thing. And then slowly you start noticing it keeps falling. And then you're like, no, just keep waiting. And it keeps falling, and it practically goes right back down to where it got pumped. Where the whole thing started, it goes right back down to it, because the whole thing was designed to get everybody in so these guys that bought early can get out making profits. And now you're holding the bag. So this is what they call a pump and dump, and it's always when they look for coins or companies that really have no history. They don't really have anything that they're worth anything. They don't do anything. When you look at this coin, it doesn't do anything. Okay. All right. So that's the first one. The next one is the market makers. So the market makers, for example, we'll go right here. We're going to use the same Shiba token, which is on the Ethereum platform. The thing is that you can actually find this yourself, and you can, see what's going on. I want to show you something about this coin. If you go to holders and then go to token holders chart, it'll show you the top 100 tokens holders. All right, so these are people that hold 41%, whoever this wallet is. This wallet holds 19%. So between the two of them, that's 60%. And then you have all these other ones we're making up the rest of them. Now this is the top 100. If you go back, there are over 1 million holders of wallets that are holding this coin. You are a very small percentage. How many Shibas you hold? It's nothing in comparison to what these guys are holding in millions of dollars worth. So when they're the ones that can control the market, dumping it, bringing it up, bringing it down, because it's an easy coin to manipulate because of the value being so cheap. You know, a dollar can buy you 10,000 million Shibas. You know, it's just, it's not, it's an easy thing to manipulate. Illegally, yes, but it's still done. Now, these are people, they have a lot of capital. You know, they use many different accounts to massively buy or sell a lot of the particular stock or coin to make the price go up or down depending on what they want. So we'll go back to this crash right here. So when you have the market is doing so well, they know, because with the algorithms, they can tell that there are people already sitting in here with heavy leverages. Okay, so there's a lot of people sitting in this area with a lot of heavy leverage. Heavy leverages are more like, if let's say you have $50,000 and the platform that you're trading out of, they'll let you, you know, double what you have or even 10 times what you have. So you have 50,000, they'll give you another 50,000 or more. So now you have 100,000, you know, into a certain cryptocurrency because, hey, this has been doing great, and they're saying that it's going to go up to $100,000 by the end of the year. So you're heavy leveraged into this, and they already know, because of that, they already see all the orders that are sitting there. So what they'll do is, for example, let's say people want to buy in, they'll trigger them into the trade, and then they'll shoot right down, making it really hard for people that are already in the trade to stay in. So all these leverages and all this heavy stuff gets kicked out. So you're helping them do this. So they already dump all their coins at 60,000 or wherever they're at, and they'll sit right down here with the other accounts ready to buy some more. So they sell at 60, they buy around 30, now they're doubling on the coins that they have because you're helping them out by going to heavy leverage. Best thing to do is don't borrow money. Use your own money. So if it comes down, it's still yours. You don't lose unless you sell. And when it goes back up, it's still your money. So you can hold on to it. Nobody's forcing you out of the trade. With a leverage, you're forced to get out of the trade, and now you owe money, and you lost. So this is an alert, you know, making sure that you don't, you know, do that. Now, this is the best part. While they're buying down here, they want to keep accumulating and huddle as much as possible. So they are going to start bringing out all the people while they're still sitting in this area, you know, like famous spokespersons and everything else. They're going to be alerting you to be careful that this is going into a bear market. They're going to have people say, you know, hey, it's like cryptocurrency is bad for you or whatever. It doesn't matter what, you know, what you're buying into, you know. And of course they're buying and buying and buying because to them, you know, this is money. You know, they see all this for them is a lot of it, and they don't want you to get in. They want to keep you scared. Then it starts to run up when it's time. And now they start talking to you about like, yeah, you need to start buying. This is a good time to buy. The market is awesome. And what does the market do? Right back down. Okay, and how do they do this? With this. The crypto collapse. Here's what's behind Bitcoin's sudden drop. And they'll tell you all the negativity about this. May 19. You know, so that's the May 19, why the thing collapsed. Let's go back over here. Let me get out of this thing. April, May, down here, right? Oh, it collapsed. Why is it bad for you? Why is it bad for you? I'm going to keep buying. I'm going to keep buying. Oh, it's terrible for you. I'm going to keep buying. I'm going to keep buying. Now it starts to go up. We're sitting in this area, which is around November. And what do they have around November? Here's another article. November 7th. Bitcoin adoption is the start of a digital revolution. And they go through all this thing, how great it is. Here, 2021, a breakout year of cryptocurrency, performance and adoption, September 23rd. Cryptocurrency market capitalization recently surpasses $2.2 trillion, with Bitcoin and Ethereum accounting for nearly 60% of the aggregate value. Bitcoin rose 60%. ETH surges 378% this year. This has been a breakout year for cryptocurrency performance as well as the adoption. So of course, you know, they're saying, hey, this is great things. Get in, get in, get in, get in. The go up, and now what is it doing? Coming down. Because you know what? The market needs to go through cycles. It went up, it couldn't break, came down. Went up, it couldn't break through, came down. They're telling you to buy, buy, buy. It cannot break through, and now it's collapsing. And then what are they going to do? They're going to sit right down here in this area. Right down here in this area, they're going to sit, and they're going to start buying as soon as it comes down here. So you're going to start seeing some little bit of green in this area right here, and that's when us people, we jump in, and it's fake, because what they'll do is they already are selling more than you're buying, pushing the market even down so they can pick up some more down here. So this is how they manipulate the market in their favor. All right, so now you're saying, all right, well, see, these big institutions are controlling the market, and I don't have a chance in hell to be able to understand what's going on. What am I supposed to do? Learn. Understand what you're buying. Understand what you're doing. So when you run into these things, you don't buy when it's high. Let me get my pencil back out. You buy when it's down here, if you believe in the company. Okay? You don't buy when it's up here. When something crashes, you look for support and resistance from the past. This is where you start buying. And then you wait. This is the one thing that most people cannot do, is they have no patience to waiting. The market will sit down here for 2-3 months. You get bored, you sell, you get into some other coin, and the market takes off without you. You buy, you buy, you buy, you buy. As soon as it starts to take off, you stop buying. You want to know why? Because it does a rush, and then it comes down. So if you keep buying, you're going to go back into the negative. You already bought down here, now you just sit and enjoy. Goes down, goes up, sorry, goes up, goes down, goes up, goes down. So see the rhythm? Up, down, up, down. So guess where the next run is going to be? Yep, we're aiming for 100,000. They didn't lie. It is going to 100,000, but it's the way they say it and the timing that they say it. They want you to buy here. They want you to buy here, which is the wrong time to buy. You buy here when it's quiet, when the market just sits there and it's not doing anything. That is when you buy. Okay? If you want to take some profits up here, perfect. Or hold on to it. If you believe in the project, just hold on to it. Because even if this drop comes down, it's already above where it was back here. Makes sense? Now, I'm not no financial advisor. This is for entertainment only. Always do your research before, diving into anything. But this is how they do this. Okay, how they manipulate the market. So if you believe in the coin, you will do well. All right. Now, I have this page. It's free. I have all these different ways of how do you get into it. New to crypto, no problem. Understanding the market in less than 7 minutes. If you don't have 7 minutes to learn the market, you shouldn't be buying. Understand how this works. Understand what the coins do. Understand what the platforms are. What the Web 3.0 is about. I give you a breakdown on all the coins. There's the majority of the coins that are in here. What Shiba is, what Star Atlas is, anything. Chainlink, Cardano, everybody's in here. VeChain, what they are, what the projects are they good projects, bad projects. Everything is in here, including on this one is a good one. Understanding when the buyers and sellers are in control of the market, which is the one I linked earlier. Understanding how to read certain things. These are here for you guys. If you actually watch these, you'll really understand how the market works, and it's free. No one's charging you anything for this. All right. All I ask is just give it a thumbs up, so that way more people know about it and go on your way. I'm glad I helped you. So hopefully this will help you guys out, and let me know in the comments what you thought of the video, and I'll see you guys in the trading room.